He's one of the world's most highly respected economists. His book, A Random Walk Down Wall Street, is an international bestseller. I'm talking about Professor Burton Malkiel, and I've been speaking to him in Birmingham about emerging markets. I started by asking, is that term, emerging markets, now a little outdated?
Well, it's a very funny expression. China, for example, is considered an emerging market. Now, it's considered an emerging market because their per capita income tends to be low. But if you go to China, you will see that in the east of the country, where Beijing and Shanghai are, you see that this is a very developed country. This is not an emerging market. It's the center and west that are very poor. So I think that when we use a term like emerging market, I think it can lead us into a lot of trouble. But look, we do have that category. It comes from the International Monetary Fund, and it is based on per capita income. So China's an emerging market, Brazil is an emerging market, and as an investor, we do need to think of these markets as being an essential part of any diversified portfolio. In my categorization, I look at debt, demography, and diminishing natural resources. And I think one ought, if one's going to make active bets, one probably wants to look at the strength of different countries in terms of these things. Debt. China has a debt to GDP ratio of 17%. Euroland is around 100%. The United States is close to 100%. Japan is at 250%. China's in much better shape. They can have a looser fiscal policy than these other countries. Demography. When countries get very old, in Japan, probably more than half the people in Japan will be retired. That country can't grow as fast as a country with a younger population. Natural resources. One of the reasons that Brazil has been such a good source for investors is that Brazil has a low debt, fairly young population, and is loaded with natural resources. They have the biggest oil discovery in the Americas. They are also a country with lots of water, lots of land, and they can be a breadbasket for the rest of the world. So I think, I don't have the term for you, but I think as you look at different countries, I think in the future we'll have to think much more about the debt that they have, their demography, and whether they are abundant or not in natural resources. I think eventually China will find it in its interest to let our yuan or RMB appreciate in value because they're very jealous of the United States being a reserve currency. But to think that that's going to happen right away when they don't have currency convertibility is a pipe dream. I think this is absolutely going to be a period where the balance of power shifts. It shifted from Europe to the United States, and I think it is going to shift from the United States to Asia. China will overtake the United States as an economic power in terms of its total economic activity in this decade.